Welcome to Is It Covered, where we break down real stories and answer the big question, is it covered? Hosted by father and son duo Bruce and Brian Chapman of the J.D. Chapman Insurance Agency. This podcast will help you navigate the world of insurance with stories, tips, and answers that really matter. From personal to commercial coverage, we've got you covered. Now, let's get started.
All right, welcome back, everybody, to another episode of Is It Covered, the podcast sponsored by J.D. Chapman, where we talk all real-life scenarios, sometimes funny, sometimes not so funny, claims, tips, tricks, and those types of things. And before we get started, as always, we like to let people know that if you do have an insurance claim, each one is so unique and different that we recommend you talk to your insurance advisor, the insurance carrier, just so you're getting the most accurate and up-to-date information. So for today, we've got another special guest. We've got Anthony from Pitti Wealth Management. How are you?
Doing well. How are you?
Good,
Great.
Thanks.
Thanks for having me.
Yeah, no problem. I know we've had a little bit of a reciprocal. You've got a podcast yourself, and
yes.
We've been seeing some symmetry and some similar things that we can chat about. So it's great to have you.
Thank you. Appreciate it. Yeah, the businesses seem to intertwine here and there, so appreciate it.
Absolutely, yeah. So I'll give you a chance here if you want to kind of tell people a little bit about yourself, maybe how you got into the business, what you do there, and a little bit about Pitti Wealth Management. That'd be great. Yeah.
So my father's been in the business for about 30 years now. When I was growing up in the business, it was, a lot of late nights that my dad would work. It was stuffing envelopes. It was helping him with marketing materials, things like that. And I thought, I never want to get into this business.
I was the same exact way. I sat around the dinner table listening to my parents talk about insurance. It's like, that's the last thing I
Right.
And my dad would work late hours and stuff too.
Yeah. So, I mean, when you're building a business, like I get it now. As
absolutely.
a kid, I didn't understand it. And I just thought, this is the most boring business ever.
No doubt.
Like, why would I want to get into this?
Yeah.
So from a very early age, I wanted to get into marketing. I thought it was fun, exciting, helping small businesses create a marketing plan and advertising and a website. So that's what I did out of college for about 6 or 7 years. Worked with small businesses. I found a niche where small businesses couldn't really afford marketing. So I was like, well, I'll just do it for them at a cheaper cost. I'll have a decent amount of clients, and that's what I'll do. Well, at 24 years old, it's really hard to run a business yourself. You learn a lot of things the hard way.
Yeah.
So cut my teeth in marketing, went into IT recruiting, found out I loved working with people, loved finding solutions, loved meeting new people. But didn't like the corporate lifestyle. So my father said, well, why don't you come work for me? You can do marketing, business development, do some recruiting for us. So I decided to pull the trigger and went to go work for him. And about 3 months in, I realized what entailed in the business as far as the people you meet, the difference you can make. And I fell in love with the business. I love the fact that anything can affect the markets. It's just tied to so many different areas, and it's really unique. So I decided to get licensed, and that was that. Basically, just all you wrote. I got my designation as a retirement plan specialist and a divorce financial analyst. I'm a wealth advisor as well. So that's awesome. How it all worked out. Yeah.
So it's a family-owned business then?
Yes. So it's my father, my brother, and then we have 1, 2, 3 other employees now.
Oh, very nice.
Right over in Victor. We're an independent firm. So what that means is we're not tied to a wirehouse like a Morgan Stanley or a Wells Fargo. We make our own investment decisions, and then you have to be a fiduciary as an independent advisor. So that just means that the decisions you're making for your clients are in their best interest.
That's awesome.
Makes sense in this business. You would think everyone would have that.
Right. So you're fee-based then, correct, versus commission-based?
Yeah, so we don't get any commissions.
Right.
Yeah.
So as you hear on all those commercials, you do better when your clients do better.
Exactly. Right, yes.
But to me, the beauty of that is that you're a face that they can meet with all the time and talk to, and you're not just over the phone and some nebulous person in some nebulous town.
Exactly.
You're a real human.
Yeah, we're not charging by the hour.
Exactly.
We're a real human.
Yeah.
When you call us, you're getting whoever is at the office, either myself, my father, my brother, Jen, Sean, now Maddie.
Yeah.
Yeah, you're getting one of us. And it's been a great business to be a part of. I think people really appreciate the fact that the advice we're giving them is for their best interest. Like we're not offering a product,
right?
Saying you need to put this in portfolio just so we can get a commission off of it.
And being independent the way you are, does that allow you to like have access and kind of be flexible on things rather than if you were just tied to, like you said, to like a Morgan Stanley or a one?
100%.
So it gives you some flexibility there.
It's been a game changer.
That's awesome.
Just as far as what we're able to do as a business, and then some of the investments we're able to incorporate into our portfolios. Like some companies aren't able to include something called a buffered ETF, which is like an ETF that tracks an index like the S&P 500, and then it has downside protection. So if some people want to be involved in the market, but they don't want to be exposed to that much risk, they could have 10% downside protection, maybe a 12, 13% cap on the S&P. Which is great for people that are, getting close to retirement maybe, but they still want a little bit of extra opportunity for gains, but don't want to be at that much risk. So things like that we're able to offer.
It's almost like a form of insurance in a way.
Yeah. It's built on options contracts, but yes, it's kind of like an insurance.
Interesting. Yeah. So I know that's a good segue into what we wanted to talk about today. And, insurance and financial planning seem to kind of go hand in hand in a lot of different things. So when you're sitting down and meeting with somebody, what do you typically advise them in terms of their insurance? I know you work with different trusted people that you know within the community, but what does that conversation typically look like?
Yeah, it's it's a conversation that is really important because I feel like people don't think about insurance that much. It's one of those things where you kind of check it off your list and you push it onto the back burner. A lot of people don't know that not all insurance is created equal. You're looking for the cheapest insurance, and again, you check it off your list. So it's discussing, one, what do we need to have insured? Is it a vehicle? Is it your home? Is it a rental property? Is it your business? I know in our business we have errors and omissions insurance.
Oh yeah,
just like a lot of attorneys or doctors. Our rental properties, some people think do I just need homeowners insurance?
Right, yeah.
I don't know. I don't know. Maybe you need to think about if someone's getting hurt at your property.
Right.
If it's, a lot of people don't know there's difference. I believe it's, is it open perils?
Oh, yeah. There's like a special form or...
broad peril.
Yeah, broad peril.
What's really going to impact you is liability, though. So do you guys recommend maybe people having umbrella policies, especially if they have a fair amount of assets to protect?
Oh, yeah. Yeah. I mean, if you're considered a high net worth individual, and it's more of just looking at what you're susceptible of.
Yeah.
If you're a high net worth individual and you've got, like we said earlier, different rental properties or different assets that could be liable that could be potentially covered from an umbrella policy. Absolutely. It's more of, on our end, more of a conversation just to see what you're susceptible of. And then it's finding partners like yourself saying, hey, this is kind of the scenario that we're in right now. What do you recommend they do? This is like their outlook from there.
Yeah, absolutely. Yeah. We work hand in hand with financial advisors on that quite a bit, which, like you said, if you do have quite a nest egg built, it can take one nasty or sometimes not so nasty incident and you're kind of exposed. And
and no one wants to think of those scenarios, but unfortunately they do happen.
Yeah, and we see them.
Car accidents.
Yeah, we see them all the time. So that kind of brings me into my next point, and I'm always curious about this, and God forbid, I hope anybody never has to go through this, but let's say like I get into, I have an at-fault accident where maybe I T-bone somebody and somebody in the other vehicle is extremely injured, or God forbid they pass away. And now my insurance policy, all of my limits are used. Maybe I don't have an umbrella policy, so I don't have this extra amount of money to tap into. I'm always curious if somebody were to come to you as their financial planner and be like, hey, look, I just had this massive claim. I can't pay for it. I mean, what would you advise somebody do in that situation? Or can they take money out? Yeah.
I mean, you can take money out. It depends on the type of account we're pulling from. Not all accounts are built the same. If you're taking from a traditional IRA, you're paying taxes on that. You're paying income tax, so potentially increasing your income by a substantial amount in the time that you take it. If it's from a Roth IRA, you've got a little bit of leeway there because it's non-taxable. A brokerage account, you're paying capital gains, so it's between 15 and 20% in some areas. And then honestly, obviously the biggest thing is the amount that you're taking out. But one of the bigger things is you're not getting that. You're not getting that increase on the investment, so you're not getting the
length of time that you have it invested.
Right,
yeah,
right. So your money is going to build off of itself over time. So let's say I'm in my 50s and something happens where I got to take a quarter of my account because I just T-boned someone,
right?
Fatality. That's going to disrupt your retirement plan, your financial plan immensely. I mean, you're going to basically destroy part of your future right there. You could end up working for another 10 years to get back to where you were. What I was looking for before was that compound interest. You're not compounding on a larger sum over time. So it's not only going to inhibit you in the now, but also very much in the future.
So I never thought about the tax implications of taking your money out to pay off a debt like that.
Yeah.
Huge.
Yeah, huge. I mean, especially if it's a large sum. I mean, you could go from a 20% tax bracket up to 30 and change real quick.
What a ripple effect. And again, that kind of comes back to the insurance side. If you didn't have the right plan in place, maybe you went online and you just typed in a few things, you got the lowest premium, you might not realize the trickle effect down the road if something did happen and now they're coming to your
and
financial
you may not even realize what's actually covered.
Right.
I mean, a lot of people don't even read the insurance policy. They just
I would say most people don't.
Yeah. You guys would probably know more than I do.
Right.
Sometimes I recommend to them if they're having trouble sleeping at night to pull the insurance policy.
Yeah, that's a good idea. I might try that. I haven't slept well in a while.
There you go. Kids, right?
Two young kids. They make you wide awake sometimes.
But when you think about it, insurance, property and casualty insurance, auto, home, umbrella, is as expensive as it is. Man, if you got caught in like a big liability suit and you had to liquidate your assets, insurance is looking really good at that point, isn't it?
Yeah. I mean, it might make we always tell people insurance is kind of a piece of paper and a promise that we hope that you never use, but in the when you do use it, it's
a lifesaver.
It can be a lifesaver for sure.
Yeah, for sure.
So do you guys work with, and you might have mentioned in the beginning, both individuals and businesses as well?
Yes. So we work with, I'd say the majority of our business is working with individuals. We also do 401ks, 403bs, 457s. We work with the business owners. We do education meetings for employees. We'll do a financial plan for employees, all part of the whole offering that we have, and then we'll help them set up their accounts to make sure that they're invested properly, meeting their retirement goals. Recently, a lot of people that I've met with, they might have an IRA set up where they're very aggressive, and then they've just been putting money into a 401k and they don't really know what it's invested in, or even a 403b in some cases, and the two accounts aren't matched. So one might be extremely conservative and one might be very aggressive. And that might be on purpose, but in most times that I've seen, it's not. It's just, I haven't thought about it.
Right.
Just one of those things. We always say, you don't know what you don't know.
Right.
True. So it's just uncovering some of those things.
Absolutely. It's always good to rely on an expert, somebody that does this day in and day out and might have, that always has your best interest in mind, but might have more knowledge on how to get things done or creative ways to do things. And
I mean, I remember when I first started working and I was looking at my retirement plan, trying to figure out what I was going to invest in. I'm looking at, large cap, mid cap, small cap, growth, value, balanced funds, real estate investment funds. And I was like, I don't know what I should be invested in. It's all kind of gibberish until you start to figure it out. Yeah. I mean, having a reliable resource to interact with and kind of go over your plans is vitally important.
Oh, absolutely.
Yeah. I'm a big believer in consulting with experts and having them guide you through things.
I was going to say, you guys are probably familiar with that.
Yeah. Right. But exactly like what your firm does, what we do, I mean, we're very much aligned on that. And again, I can't stress how important it is to really work with experts.
Yeah, absolutely. There's the AI I don't think can replace that. If not to go down that rabbit hole, but I think that there's
It's
something.
so funny. We just had a conversation about this morning, talking about AI taking over a lot of these jobs. And, I do think it will take over small parts of it. But I think if you incorporate AI, you can adapt with it.
Yeah.
I have a feeling that humans have a genuine want and need to have a connection with other people. I do think social media and the internet has pushed people away from each other, but having that face-to-face conversation with people, having that relationship with people, I think is vitally important.
Absolutely.
So I don't think that is something that will go away.
Yeah.
Because there's been so many times where I've talked to people that are like, hey, I've got my investments. Like, I know what I'm doing as far as investment wise. But, the markets can take a turn. Things can happen. You can have a kid. You can get married. You want to buy a house. Kids want to go to school.
Right.
You want to go on vacation, retire early. Well, how do I do that? How do I make that plan? How do I, am I telling an advisor that I am okay with being aggressive, but in the back of my mind, I'm actually very nervous.
Right.
And it's things that we've, come across by meeting with a lot of people that we've been able to inherently figure out and say, okay, well, you telling me you're aggressive, but after our conversation, I feel like you want to be a little bit more conservative.
Right.
Because of X, Y, and Z. Am I following that correctly? 9 times out of 10, they're like, yes, actually, that is exactly how I feel. And AI, I don't think can pick up on that. So
Right.
I do think that is a vital thing. It's very funny. We just had this conversation about 2 hours ago.
It's something that's always coming up. It's the hot topic for sure.
It is.
It's funny what you said too, because as you get older and you grow and your life plan changes, your financial plan changes, and your insurance should change right along with that.
Yeah.
Absolutely.
Yeah.
Yep.
So
New drivers.
Yeah, new drivers, right? Kids going off to college,
Right.
getting renting an apartment,
Retiring.
Yeah, right, exactly.
Yeah.
So, is there anything else that maybe you would want to tell our listeners? Any piece of advice or anything that maybe how to get a hold of you if they had any questions, that type of thing?
Yeah. So you can get a hold of us. You can check out our website, thepittigroup.com. We've got a Facebook and Instagram, the Pitti Group Wealth Management. You can check out our podcast. It's called The Finance Things in Life. If you call us, you're either getting myself, Matt, Sal, Jen, Maddie, Sean. Feel free to give us a call with any questions. Like I said before, you don't know what you don't know. There's no dumb question. Happy to chat through any specific scenario or any situation. Happy to help.
Awesome.
As far as spelling your name, I know it's maybe not what you're thinking. How do you spell that exactly?
Pitti.
Okay.
Yeah. So the I sounds like a lot like an E.
Yeah, there you go.
It's the Italian spelling.
Yeah.
Nice.
Yeah.
Well, thanks for joining us today. We
Yeah,
appreciate
thank
your
you.
expertise and spending a little bit of time. And we look forward to staying in contact with you.
Appreciate it.
Absolutely.
Thank you for having me.
Not a problem.
Good to have you.
Till next time, everybody. Thank you.
See you later.
Thanks for listening to the Is It Covered podcast. To learn more about how JD Chapman can assist you with all your insurance needs, please visit our website at jdchapmaninc.com or call us at 315-986-4062. JD Chapman, we've got you covered. This podcast provides general information only. It does not offer or bind insurance coverage. Coverage cannot be changed or confirmed through this podcast, email, voicemail, or fax. Insurance only takes effect once confirmed by a licensed agent. For specific coverage details, please call us at 315-986-4062. All coverages are subject to the terms, conditions, and exclusions of the issued policy, which may vary by state. This podcast does not provide legal, tax, or financial advice. Please consult a professional for those needs. Links to other sites are provided for convenience. We don't control or endorse their content. Any claims, scenarios discussed are hypothetical. Coverage decisions depend on the specifics of each case.